Hey everyone and welcome on the channel. My name is Jonathan and in today's video we're going to be looking at what is a TFSA account. Have you ever wondered what is a TFSA? Well, let's start by the beginning. TFSA stands for Tax-Free Savings Account. It was first introduced in 2009 by the Government of Canada. This can literally act like a shelter against taxes. It grants you tax-free from interest, dividends, or even capital gains you make in this account. This can be a great tool for anyone who would like to set aside money in eligible investment and watch those savings grow tax-free. TFSAs can be opened with most of banks and brokers. They have never been so accessible with online broking. You can literally use your mobile device and create one within 2 minutes. In order to be able to contribute to a TFSA account, you must have a valid social insurance number. You must be a Canadian citizen, and also you must be at the age of majority in your current Canadian state. Even though this is a great tool, there's boundaries to it. You cannot save an infinite amount of money, unless not before the composed interest has done their work. Here's where the contribution rooms allowed by the government take place. Contribution rooms are determined by the government and this each year since 2009. Those contribution limits can start accumulating from the day that you are 18, which means if you were 18 years old in 2009, well, you will be able to contribute the whole contribution limits, which is actually in 2022, $81,500. In the case where you were not major in 2009, then here's how to calculate your available contribution limit. Okay, now, so let's use the case of Thomas as an example for the records. So in 2009, he was only 13 years old, which means he was not able yet to contribute to his TFSA account. He would only had to wait until he gets 18 years old, and this would happen in 2014. So Thomas was really happy he could finally contribute to his TFSA account. By the time I am recording this video, Thomas would now be 25 years old, which means he would now be able to contribute from 2014 to 2022, which would be a grand total of $56,000. And this money would be protected from taxes, no matter how it grows. Many of you probably wonder what is an RRSP and what's the difference between this and a TFSA, so I'm going to be explaining what's the major difference between both accounts. Here are the big lines between an RRSP account and a TFSA account. In a RRSP account, you're going to be saving tax when contributing. The amount deposited would be tax deductible. The counterpart and the particularity of a RRSP is that you're going to be taxed when withdrawing this money. Here's where you have to be prepared. The most common strategy here is to contribute to an RSSP when you're having a high income. That way, you can lower your tax bracket and keep your savings for yourself. In counterpart, you will be taxed when withdrawing this money. The strategy here is to withdraw it when you have a lower income. That's why people tend to do it more when they're retiring, because they have a lower income. That way you can lower the tax rate on the money you withdraw as it counts for an income. A TFSA account doesn't offer any upfront tax break, but in counterpart, when you're going to be withdrawing this money, you're not going to pay tax on any withdrawals, including growth, which can represent significant amount of tax savings. Make sure to ask a financial advisor for which one would be the best for you. Maybe it can be only an RSSP, a TFSA, or even both. As both can be great options, depending what are your personal goals. When do you want to retire? Or even what do you want to do with your savings? Now let's go back to our TFSA. We will now learn how to calculate the available contribution room following a withdrawal. Now let's go back to Thomas in 2021 and let's say he has a total contribution available of $50,000. But Thomas would like to buy a new car. And for this, he would need to withdraw $10,000 from his bank account. So he would only have $40,000 in his TFSA account. Then Thomas would have to wait a complete year, so he would be able to put back the money in the beginning of the next fiscal year. He would be able to put the $10,000 he did withdraw from his bank account, plus the new $6,000 allowed by the government in 2022, which would make a total of $56,000. Moving forward to the next fiscal year, what if Thomas over-contributed to his TFSA account? What's gonna happen? Well, if you do put back 20,000 instead of only 10,000 like he did withdraw, he's gonna have 10,000 over in his TFSA account, which means he would have a total of $66,000. Thomas will now be subject to a tax equal to 1% of the highest excess in his TFSA amount in the month, and this for each month that the excess amount stays in your account, which means he will be taxed 1% each month. This can be really harmful for his savings. The TFSA work in a particular way with US dividends. It is important to mention that you can be taxed on your dividends if you are holding US dividends in your TFSA account. Owners of US dividend stocks are subject to a 15% withholding tax on dividends. You likely will not see this withholding tax on your TFSA statements. The withholding tax is typically applied before you receive your dividend. As an example, if you are owning $10,000 worth of a US stock with a dividend yield of 5%, then your brute gain would be $500 a year. Then you would be taxed 15% from this $500, which would end up being a tax of $75 a year. Your net income from this yield would now be $425. As I mentioned, this only applies to US dividends. I hope you guys enjoyed this video. I hope it answered your questions regarding a TFSA account. Remember, a TFSA can be one of the most powerful tools for anyone who would like to start investing. Combined with the compound interest over time, the gain can be significant on the long run.